This is an Uncovered Japan company research report on Hikari Business Form, ticker 3948. It is a Japanese small-cap specialist in securely turning public sector and corporate data into printed, enclosed, and mailed communications. The starting point is a small, underfollowed company with roughly a 6.6 billion yen market value. The shares traded at 0.65 times book value and yielded 4.37%. While the equity ratio was nearly 78%. That combination explains the interest, but it does not make the operating challenges disappear. The business is more than conventional printing. Its data print processing, or DPP, service takes a municipality's or company's raw data, produces personalized notices, and completes the physical workflow: printing, inserting, sealing, sorting, and dispatching. This was 60.6% of fiscal 2025 sales and grew 5.4%. Even as most other lines contracted. The service mix makes the strategic tension clear. DPP is the core engine. Forms and commercial printing remain a large legacy business, but are in structural decline. WEB and BPO are intended growth adjacencies, yet together they are small, and their recent execution has been uneven. The forward case depends on DPP holding up, while cross-selling becomes more credible. Hikari's defensible niche is not headline technology. It is trusted handling of personal data, a long public sector track record, and a one-stop workflow from data through delivery. Those features matter when municipal notices must be accurate and secure. But the company is still subscale, labor-intensive, and exposed to a shrinking paper-based market. The earnings record is the weak link. Revenue fell from 12 billion yen in fiscal 2022 to a fiscal 2026 estimate of 7.7 billion. Operating profit fell much faster because this is a fixed-cost business. The report describes the margin compression as a shift from 16.4% at the peak to roughly 3 to 4%. Cash flow reinforces the caution. Free cash flow was just 20 million yen in fiscal 2025, far below the dividend. That does not create an immediate balance sheet crisis because cash reserves are ample. It does mean that the long-run dividend case requires a recovery in earnings and cash generation, rather than simply a willingness to keep distributing cash. The balance sheet is Hikari's central strength. The report estimates cash and investment securities at roughly 77% of the market value, with about 81% equity and little meaningful debt. The trade-off is low capital efficiency. Return on equity had fallen to 1.6% in fiscal 2025. This is an asset value story, not proof of a high-return franchise. Management has made shareholder returns a priority through dividends and buybacks. The fiscal 2025 payout ratio was 162%, so the distribution was not covered by that year's earnings. The report estimates that cash alone provides a multi-year buffer. The important distinction is between near-term capacity to pay and long-term sustainability, which depends on an operating recovery. The current plan targets 8.3 billion yen of revenue and 500 million yen of operating profit by fiscal 2028. That is a near-flat recovery from a lower base, not a growth breakout. The strategy is to deepen DPP-led cross-selling into web and BPO while improving efficiency. The report also notes that earlier plans were revised repeatedly, so execution needs to be watched rather than assumed. The report's own 3-year scenario range runs from 900 yen in the bear case to 1,800 yen in the bull case, against a 1,143 yen reference price. Key upside indicators include DPP demand, evidence of a profit recovery, and concrete PBR improvement. The downside risks are a dividend cut, paperless substitution, input cost pressure, and the loss of a large municipal account. To conclude, Hikari Business Form is a cash-rich, high-yield small cap with a real public sector data printing niche. Its assets cushion the downside, but the earnings engine is fragile, and the industry is structurally challenged. The useful scorecard is simple. Follow DPP resilience, cash flow recovery, capital return coverage, and management's delivery on the fiscal 2028 plan. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.